Hello again, everyone. Now that I'm back, I am going to be working through the backlog of requests which I have received. I'm hoping to do so in an order that is logical in terms of most talked about things first. And with that, today I will start with NexGen energy. Hey everyone, just quickly, you can read this here or in the description of any video. Just remember, what I do and say here is meant to be a helpful supplement or thought filter for your research, not a replacement for it. I can be wrong, and I'm often quite early, aka wrong for a good while, which is why none of this is ever investment advice. Just a quick summary here. NexGen is a monster junior in that it already has over $500 million in market cap. It has a good chunk of Canadian dollars that they're using to advance the project. The PFS, preliminary feasibility study, has a net present value of over $3.5 billion, discounted at 8%, and an initial rate of return of 56.8%. This is massive. Also, I believe this will get even better as they will expand it over time and increase the size of the deposit, just because some of what was in the PFS was they were not able to put some of their resources in the PFS, but they will as they continue. So this deposit is incredible. Now, just a quick note on the assumptions that they use for their PFS. I've been asked how reasonable those assumptions are, and I will say this. The price-wise, in terms of the selling price of uranium, I find it exceptionally reasonable. The timing often used for the discount for these pre-feasibility studies goes back, is discounted to the start of construction. And that, as I will get into later, is the main question that I have about something like NexGen. So NexGen's deposit, named Arrow, was discovered in 2015 and is by far the biggest undeveloped uranium project in the world. And that's right now. It will probably become larger, and it is also high grade. This thing is amazing. Now, I'm sure I probably don't have to be telling you this because you probably already know. But oddly, I would say the biggest question regarding this project stems from the fact that it is in what is otherwise a great jurisdiction of Canada. Now, you guys who follow my channel know that I always tell you when I own a stock that I talk about. In this case, my confession is, even though I do believe that it is the biggest, best, most impactful uranium deposit in the world, I don't own shares. Now, make no mistake on that. I want to, if everything else was equal. If I was paying the same relative valuation as some other companies, I would own some of this deposit. Now, that being said, I feel like there is a premium, and that premium is likely deserved because I do believe that they will go into production at some point and they will make billions of dollars. Now begins my main question of when might they go into production? Well, this is the main reason that I don't own it. I'm not sure when they go into production. Deposits in the Athabasca Basin in Canada normally take between 10 and 15 years, sometimes longer, very occasionally shorter, to get permitted and go into production. Now, Arrow has been moving very quickly. They have been expanding their deposit, drilling, moving very quickly, quicker than almost any other company currently out there to develop the deposit. But Arrow's 2015 discovery puts that time frame between 2025 and 2030. Now, when I look in, if I were to assume earliest 2025, this deposit is, again, huge, and the mine that goes with it is huge, producing more than 10% of the supply, almost 15% of global supply at current paces. And when I look at that, Cigar Lake, Cameco's Cigar Lake, comes offline in 2028. So if I were to pick a single year when I think it's most likely they go into production, that would be my year. Although it is possible they come in earlier and there's some overlap of oversupply, or there's a million things that are possible. But in that time frame, that year makes the most sense to me. Now, whether it's 2025 or 2028, that still presents the same type of problem. Um, that would put it basically at the back of the line, towards the back of the line of known projects. Now, this may not be problematic for the share price, but as I'll go into in the next few slides, it may pose an issue for the company if, depending on how the demand picture shapes out. Now, when I look at the emerging supply gap, the deficit in the market, I don't know how long we can stay below $50 uranium. But the longer we do, the more likely we hit 75, because I think that's approximately 70. 75 is where we trigger some of those potential developments that are ready. Now, if we stay lower for much longer and everything goes well, then we could pass $80 on a supply fear. Now, the thing about passing $80 is it doesn't really incentivize that much more ready production. Why? Well, because there's not really that much more ready production. So what passing $80 would do is tell everyone in the world, hey, there's not enough uranium. We need to find some. We need to get everything ready as soon as possible. Now, that would cause everyone to rush. So if the price goes above 80 and all of the ready companies are in production and all of the almost ready companies are rushing to be ready, then all of the people in places that are quick to permit, such as Africa, that have known supply or something close, would be able to push very, very quickly to go into production. And some higher cost stuff in easier places to permit also would be able to potentially rush past something like NexGen. Now, then wouldn't NexGen also benefit from these prices? In theory, yes, but my question is, would it be problematic for, after all of these companies rush to get into production, for the largest mine in the world to break into the market following that? This scenario is very unfortunate for any company that is waiting for a government to stamp some documents so that they can move on. This could be the case for NexGen, because if you look, even if uranium is, I don't know, $200 in 2021, if they can't go into production before 2025 or 2028, I don't know what happens. And that is questionable. For me, that's what I'm questioning, literally. So then that is why I think that their size mixed with their time frame is basically the only reason that I don't own them. So now, and this is a good question, what if you were to ask, wouldn't their share price track the price of uranium? And to that I would answer, in theory, yes. And that would it wouldn't be a problem for current shareholders. But if I were trying to play that game, there's ways that you could buy pounds in the ground that are closer to being ready for maybe 10 cents, 20 cents per pound. Whereas NexGen at the time of making this slide costs over $1.77 per pound. Now, do I believe that in a reasonable $50, $60 market that premium is worth it? Probably. But the point is that if the cycle was going to play out that way, I believe there's significantly more leverage in some other plays. So obviously, my whole question around NextGen is the timing matter. If they can go into production sooner, the whole thesis, in my view, for the entire cycle can change. And also, if uranium could stay at, I don't know, $50 and get by for the next few years, I'm not sure that can happen. But if it does and the price is subdued there, then all of the other many of the other $50 deposits would have to come online and re-rate to producers for that to happen. Versus the other scenario, if the price skyrockets and it becomes a pounds in the ground game, the lower priced likely have lower priced pounds, that is, have more potential upside. So also, if the uranium sector rolls back over after that happens, or even now, NexGen may hold up better than a bunch of the other names percentage-wise because of its quality. So, but if that happens, it's still potentially, probably, if the sector rolls over, goes down. So that is what I'm seeing. Now, isn't NexGen a takeout target? I've seen a lot of talk about that. Oh, absolutely, it could be. However, if we're talking about supply questions out of China, I'm not sure they would be allowed to buy it even if they wanted to, seeing as it's in North America, and I'm not sure the diplomatic relations with Canada are that great right now. Um, I'm I'm not sure also that other majors will want to break into the uranium market after last cycle didn't go so well, but you never know. And its size makes it tough for a mid-tier to afford it because it's so big and so good. I'm sure that could be worked around, but it's just a question. And Cameco may buy it at some point, but if they're not buying it now, why would they wait for the less good time of the cycle, which I believe they are in? They have a great site and control over. Why would they wait till later to pay more? And most importantly, for the reasons that I mentioned in the last half of the video, I'm not sure that I would buy it if I were shopping at the peak of the cycle because of the back half of the cycle. That being said, all of those reasons pale into comparing when if Rick Rule thinks it's a takeout target, I'm not going to say he's wrong. It's probably a takeout target and it probably will be taken out this cycle because I'm not an expert on takeouts. Bear in mind also that if I'm way off base and they get their definitive feasibility study done on schedule and they submit their proposal to the government and they accept it really quickly because it's really simple and they're able to basically immediately uh, rubber stamp the proposal and permit the mine and mill because they will need a mill, which my view is may take longer to permit than potentially. You never know. And if they can do that, and that's immediate, which I don't think it will be, but basically, if they're ready to go into production in 2022, 2023, then the entire cycle could look drastically different. And one in that case may not want to be as bullish for uranium, because if they can fit 25 million pounds in the market, maybe 29 million pounds, depending on where you look at the feasibility study, and then you add that to Denison's 7 million and a bunch of others, Berkeley, Global, you already have a lot of supply that works below $50. So if you think that's likely, then maybe for the time being at least, people should be less bullish about uranium if this is likely, because you never know, maybe Kazatomprom can pump in more supply. But that's just my point about if I'm wrong about the timing of NexGen. Now, just a note on the demand side of the equation. I use a set of assumptions that I deem to be reasonable to likely. Now, I don't invest based on best case scenarios. I prefer the likely scenarios, which can improve in a positive way. Now, if there is a massive reactor build out, if China builds 8 new reactors a year and the world decides to join in, then in that scenario, basically every uranium deposit that we currently know about can come online, and we would still need to be looking for uranium and finding more and bringing that to production. This isn't the scenario I use, but in that scenario, something even as big as NexGen wouldn't really have an issue coming online. If it comes out that way, NexGen would do great, make tons of money, and everything would be great. Now, that's not the set of assumptions I use, but if that does happen, then my concern about timing is void. Now, in conclusion, this basically boils down to the reason I don't own it is me being too cheap to pay slightly more for quality when I don't really envision a scenario where the quality is the best performing company. Now, I do think of this as the blue chip utility way of playing the sector. If you have a lower risk tolerance, then this is probably a great way to play it. But I don't see a way that this is the relative best performer, and I do see a way of where that could be a number of other things. Now, to be sure, there's a lot going on here and a lot of different factors um, different ways the cycle could play out. I just don't own NexGen at this point, but I do think very highly of the way the company has been run and the deposit. So that's it for today. Thanks for watching, everyone. As always, I welcome any questions and comments, um, preferably in a polite way, but whatever works for you. Also, I will probably be polling Twitter to see what you guys want to see next. Probably won't be a uranium one next, but we'll see. And yep, that's it for today. I hope you enjoyed, and I will catch you next time.